Hi, my name is Matthew Lanham, and today I'd like to explore with you the growth of the exchange-traded fund sector and the role they can play in the asset allocation of many investors' portfolios. The Australian Financial Review has advised that approximately $416 billion of ETF funds were managed in 2005, and this figure has grown to $2.5 trillion in the 2015 year. Investment managers have continually innovated the product by providing exposure to global and domestic indexes, sectors of the market, and even synthetic opportunities such as commodities and currencies. On the back of this growth, we have to ask why it is that investors are being drawn to the ETF space. What we're discovering is that investors are becoming better educated and are seeking lower cost funds that show greater liquidity compared to your typical mutual fund. The innovation of synthetic products, which provide exposure to previously unreachable opportunities for the average retail investor, have grown the investment horizon for many novice investors. In addition, the passive investment philosophy of an ETF finds the best of both worlds between a typically passive managed fund and investing actively in individual securities, bringing both comfort and excitement to the investors on both fronts. Vanguard, one of the world's biggest ETF providers, explores the use of ETFs through two investment strategies. Firstly, in a passive manner via holding ETF products as your core components, which provide exposure to your desired asset classes in full. An alternative to this is the core satellite approach, which involves holding a strategy where an investor can choose their desired core holdings for each asset class and then actively choose overweight and underweight positions in seeking alpha and excess returns by individual stock or fund security selection. The growth of this sector has allowed a portfolio to not only be fully exposed to all traditional asset classes of the portfolio, but also to sectors which weren't previously taken into consideration from a traditional perspective, namely commodities and currencies. A few examples of popular ETF funds which may be used in the asset allocation process include the Vanguard Australian Shares ETF, Spider S&P 500 ETF, and the Beta Shares Gold Bullion ETF. Advisors today recommend holding diversified portfolios across an array of asset classes in order to gauge the benefit of holding uncorrelated investments in a portfolio. An ETF provides an investor this diversified exposure at a low cost relative to the market's performance. To summarize our discussion on the ETF, the explosion and growth of this sector has led to the creation of many markets which were previously unattainable to the average investor. The public are becoming ever more educated and understanding the theory behind investing and the benefits that an ETF can provide to your portfolio. Its role in asset allocation is quite powerful, with the exposure of many asset classes on a diversified front to a portfolio with uncorrelated assets, providing an efficient and low-cost portfolio. As time progresses, we only see this product continuing to expand over the short term and introducing new and improved products.